Stop me if you've heard this before. Never take a trade unless your risk reward is at least 3-1. Well, I'm about to show you why following that advice might be the reason you're losing money. What's up, traders? In today's video, we're going to completely flip the script on one of trading's most sacred rules. I'm going to show you the actual math, real trade examples, and why a simple 1-1 risk reward can make you more money than chasing those sexy 3-1 setups. And if you're tired of watching winning trades reverse into losses, you're going to want to stick around for this entire video. Let's get into it. All right, so let's start with what every trading guru on the internet tells you. They say you need at least a 2-1 or 3-1-1 risk-reward ratio to be profitable. Risk $100 to make $300. It sounds perfect, right? It's literally built into every trading calculator and course out there. But here's what they don't tell you. They're only showing you half of the equation. They talk about risk-reward, but they conveniently forget to mention win rate. And that's where the entire house of cards falls apart. Think about it. A 3.1 risk reward means your target is 3 times further away from your entry than your stop loss. So the market has to move way more in your favor before you can take any profit. Meanwhile, the market doesn't care about your risk-reward ratio. It does what it wants. And most of the time, what it wants to do is not give you that full 3-1-1 move. So before we go any further, smash that like button if you're ready to hear the truth about risk-reward ratios. And subscribe because I'm dropping trading reality checks like this every single week. Let me show you exactly what happens when you actually track the numbers. And I'm not talking about theory here, I'm talking about real trading results. Let's say you take 100 trades over the next 3 months. Here's how it plays out. With a 3-1 risk-reward ratio, if you're really good, you might win 35% of the time. That's being generous, by the way. So 35 wins at $300 profit equals $10,500. 65 losses at $100 equals negative $6,500. Net profit, $4,000. Not bad, right? But wait. That 35% win rate, in real trading with real market noise, most traders with 3-1 targets are hitting maybe 25 to 30%. Let me show you what happens at 25%. 25 wins times 300 equals 7,500. 75 losses times 100 equals negative 7,500. Net profit, 0. You're breaking even. Now let's look at 1-1. With tighter targets, a 60% win rate is very achievable. Watch this. 60 wins at $100 equals 6,000. 40 losses at 100 equals negative 4,000. Net profit, $2,000. And here's the kicker. That 60%, that's sustainable. That's realistic. I've maintained win rates between 58 and 67% for the last 18 months using 1.1 setups. So even though each win is smaller, you're actually making money consistently instead of gambling on those low probability 3-1 runners. Let me tell you about a trade that changed everything for me. This was about 3 years ago when I was obsessed with 3-1 setups. I had this perfect setup on a stock. Clean breakout, volume coming in, everything looked textbook. I entered at $50, stop at $49, targeting 53 for my 3-1. The stock rips up to 52.75. I'm almost there. I'm up nearly 2.75 R. Then earnings whispers start hitting Twitter. The stock tanks. Not only did I miss the profit, I took the full $1 loss. $50 per share times 500 shares. I lost $2,500 on a trade that was up over $2,000 at one point. That's the reality of 3.1 trading that nobody shows you in the Instagram screenshots. You watch winners turn into losers over and over again. And it's not just frustrating, it's financially devastating. This happened to me 17 times in 8 weeks. My win rate dropped to 18%. I was about to quit trading completely. Then I made one simple change. I started taking profits at 1-1. Suddenly, those same setups that were reversing on me, I was banking the profit before the reversal even started. My win rate jumped to 62% in the first month. Were my wins smaller? Yes. Was I actually making money? Also yes. and that's the only number that matters. So why does 1-1 work better? There are 4 main reasons, and this is critical to understand. First, market structure. Markets move in waves. They don't just go straight up or straight down. They push, they pull back, they consolidate. A 1.1 target respects this reality. You're taking what the market is giving you right now, not what you hope it might give you later. Second, probability. The further away your target is, the more things have to go right. With a 3.1 target, you need the momentum to continue, you need no significant resistance levels in the way, you need no unexpected news, and you need the overall market to cooperate. That's a lot of variables. With 1-1, you just need one small push in your direction. Third, psychology. This is huge. When you're consistently hitting targets, you build confidence. You trust your system. Your trading becomes mechanical in the best way. Compare that to watching 75 out of 100 winners reverse into losers. That destroys your psychology. You start second-guessing everything. Fourth, frequency. With 1-1 setups, you can take more trades because you're not waiting for perfect extended move conditions. More trades with positive expectancy equals more compounding. I'd rather make 1% 20 times a month than wait for one 5% winner. Now look, I'm not saying 3001 ratios are always bad. There are specific situations where they work great. When you've got a stock or crypto and a powerful trend with momentum, shallow pullbacks, and clear continuation patterns, yeah, you can hold for bigger targets. If you're holding positions for days or weeks in swing trading, you can afford to give the trade more room. You're not worried about intraday noise. If you're super selective and only take 5 or 10 high conviction trades per month, you can wait for those perfect setups. When you've got major catalysts like earnings, FDA approvals, or economic data, and you've got a real fundamental reason for a big move, 3.1 becomes more realistic. But here's the thing. For most retail traders, especially if you're day trading or swing trading on shorter time frames, these perfect conditions don't happen enough to build a consistent strategy around them. You might get 2 or 3 legitimate 3.1 opportunities per month. What are you doing the other 27 days? You're either forcing trades that don't qualify, or you're sitting on your hands missing opportunities. All right, so how do you actually use this information? 3 steps. Step 1, track your real results. Stop trading based on what sounds good and start trading based on what actually works for you. Open a spreadsheet right now. Log every single trade with the risk-reward ratio and the actual outcome. After 30 trades, you'll see patterns. You might find that your best trades are hitting 1-1 or maybe 1.51 before they reverse. That's your data telling you something. Step 2, adjust targets based on market structure. Stop using arbitrary ratios. If there's resistance at 0.8 ROA, take the profit there. Don't be a hero holding out for 3-1 just because some course told you to. The market doesn't care about your rules. Step 3, focus on win rate. Your goal is to find the sweet spot where your win rate and risk reward multiply to give you the best expectancy. For most traders, that's going to be somewhere between 1,001 and 2-1. A 65% win rate at 1-1 gives you an expectancy of 0.3 R per trade. A 30% win rate at 3-1-1 gives you 0.2 R per trade. The math is simple. And here's a pro tip. Start with 1-1, master it, and then experiment with scaling out. Take half at 1-1, let the other half run for 2-1-1 or more. You guarantee yourself a profit while still giving yourself upside. Best of both worlds. Look, at the end of the day, trading isn't about having the sexiest setup for Twitter or the best risk-reward ratio to brag about in Discord. It's about making actual money that you can withdraw from your account. A 1-1-1 risk-reward ratio might not sound as cool as 3-1, but when you're consistently profitable month after month, nobody's going to care about your ratio. They're going to care about your results. So here's my challenge to you. For the next 20 trades, commit to taking profits at 1-1. Track your win rate. Track your P&L. Then come back to this video and drop a comment letting me know how it went. I read every single comment and I'll respond. If you found this valuable, do me a favor and share it with one trader who needs to hear this message. And if you haven't already, subscribe and hit that notification bell because I'm putting out real, no nonsense trading content every week. Thanks for watching, and I'll see you in the next one. Trade safe out there.